Hey everyone, welcome to Breakout Wednesday for the 5th of March 2025. It's currently 9:30 p.m. on the West Coast, just past midnight, obviously on the East Coast. First of all, remember this is not financial advice, not a financial advisor. This is simply a video blog on how one trader sees market, and everyone needs to take responsibility for their own decisions. Right, here's a chart of the ASX 200, and obviously we're in a retracement, and talked about it last week, still going down. It's not like a full-blown crash, like panic crash, and that may be coming, I don't know. But it's a cluster out there at the moment in terms of geopolitics, Trump and Musk and Ukraine and tariffs with Canada and Mexico, with China and, the retaliation against the US by various countries, it's just go on. And it just wouldn't shock you like this. So before I get into it, this week I'm freewheeling, right? I don't really have anything to talk about other than just crapping on about what I'm doing and views on stuff and stocks and blah, blah, blah. But it's just really freewheeling. But, it wouldn't surprise me one iota to wake up tomorrow and see that Trump has done a reversal on the tariffs and he's decided to support Ukraine and the markets have rallied 6%, right? Also wouldn't surprise me to wake up and that he's doubled down, he's threatening Ukraine, he's, threatening Europe, or he's doubling down on his tariffs, he's told Mexico to F off and all that sort of stuff. Wouldn't surprise me either, and the markets could be down 8%, right? I mean, who knows? It's just volatile. You can't predict what this dude's going to do. And so who knows, right? But it just, things always seem negative and depressing, right? When the market's getting hammered, and the markets always recover. Like, it's what they do. It's like the markets will recover because markets is business, and great businesses can continue to be great businesses, Except for maybe this one, Tesla. It's like, I was a huge Tesla fan. I've got a Tesla. I love it. I still love it. But what Musk is doing to the company, it's like shit. You imagine being a major shareholder of Tesla and seeing this guy just do what he's doing. You just want to, punch him in the head, wouldn't you? But that was a great short, and it just goes to show the technicals rule. And if you'd just taken that short, you could be up big. And it was a clear short. We posted about it on the forum. It was clear for everyone to see. But did you have the courage to take it? I didn't. I thought about it and I didn't pull the trigger. And so, but that's that. Like, it's volatile. And I just remember those around that trading during COVID, it felt like the world was ending. Those around during GFC, it felt like the financial system was ending. And there's been little crashes, in between. But those were the two major ones, and I really was fearful. And we're nowhere near that at the moment. But there is definitely potential for it. It depends what Trump does. It depends what happens with the war. It could escalate. Shit could happen. China could get sniffy with Taiwan. I mean, you can't make this shit up, right? And this is the whole thing about the markets. Like, you can have a plan. It's like the boxer that has a plan and gets in the ring and gets punched in the face, right? Like, you can have a plan for trading stocks and investing in stocks, and then life happens, right? Like, then Trump comes along and Musk comes along and war comes along and Putin comes along, and it's just, and shit happens and markets crash and markets get volatile, and look at it a bit like, say, Buffett might look at it, like the greatest companies in the world that have good businesses and continue to print cash, they're going to be printing cash. Some companies make more money in war than, in peace times. A lot of companies are simply unaffected by a war, unless it's a truly global world war, which, I'm not sure is possible. And, business goes on, right? There is short-term volatility, and, for the great companies out there, this is always a buying opportunity, right? And if you look at some of the great companies in the world right now, like they're if you look at monthly charts, they're pretty unaffected by anything. Like, this is not really a retracement Apple, to talk about at the moment. But all I'm saying is that there is potential, and it could go fling back up or it could fling down. I mean, who the hell knows? It's a cluster, and you just need to have a plan and your wits about you, and just stick to your plan. And the trading account, I'm certainly not taking like shitloads of trades. I'm just gonna wait for stuff to set up and take them, right? But I'm not going to take 10 at once. I never really take 10 at once, but I might take 1 or 2 or 3. Ease into it, see how it's going, see how feeling them out, and then add to them or take others, and depending, Let's just quickly rattle through some stocks, right? So Gear, a long-term investor in Gears, everyone knows, okay, this thing's been hammered down to its 200-day and past it. It still hasn't had that complete blood on the streets. I haven't added to that yet, but if the market really tanked and this thing just kind of started plummeting 100%, right? And I'll let you know when I add to it. I'll post on the forum and stuff, and happily add to that. Okay, everyone always says I want to wait for the dip and buy the dip, and then the dip comes and next to no one buys, right? Smart people do, but next to no one does, because they get scared and they kind of pretend it's not happening, and they say, oh, I'm just going to wait for the market to recover, and then the market recovers, new all-time highs, and they start buying, right? So it's just long-term investors. When there's blood on the streets, I think I've proven with gear over the last kind of 5 years that it pays to buy when there's blood on the streets. It really does, right? So I'm going to add to that, touch wood, if the market crashes, not touch wood, because I don't really want the market to crash, to be honest, but hopefully I never add to gear ever again. So let's just flick next one, CBA. CBA is still sitting above its 50 exponential moving average. I mean, actually 100 exponential. This is 50 here, the yellow one, the 100 is the blue one. So, still sitting above its 100, which isn't too much of a violent retracement, is it? BH, okay, BH is holding up. So there's huge support here at BH, right? I'm a long-term investor in BH. So I'm not going to hide from the fact that, I've been getting hammered a little bit lately. I don't know what's going to happen. Like, does this break down, right? Bang, shit. That breaks down there. Well, you could see that falling down to $26, couldn't you? Or whatever. So, let's see. I might have to reevaluate my position if it starts breaking down, and but shit. That's BH. Tesla, I've already talked about. I mean, holy hell, if anyway. Tesla, that's been getting hammered. Google, okay, Google's likewise down below its 200-day, had this fake out and then reversed, and been getting smashed, and that's that. So what am I doing, right? I'm looking at stocks that are holding up. Fletcher Building, this New Zealand building company, is still holding up here. I talked about it last week. Okay, I'm just watching, right? If this can just hold above these moving averages and form this type base, then 100% I'll be in it, right, on the break. GMD, like obviously some of the gold stocks. I mean, gold obviously likes a bit of turmoil, likes a bit of shit going on, and a bit of volatility in the world. GMD is still stuck in this base, and it's tightening up. Let's whack some Bollinger Bands of it and see what the hell's going on, right? So volatility, Bollinger Band on, it's starting to tighten there. So, I don't mind that. What else was there? There's just the gold ETF, right, on the ASX, listed on the ASX. There's a bunch of gold ETFs, but tightening up there too, right? Kind of like a GMD chart. Yeah, so that's that. What else was there? That's it. And then in terms of scans, I'm going to do, right? So go up here. The scans I like doing during market crashes is scanning toolbox, pattern events. Let's just go to events. I'm liking this kind of percent scan. Where the hell? Actually, shit, guys, I'm going to the wrong one. What am I doing? Shit. Go to scans. Go to indicators and events. Close above the 20 exponential moving average. Relative strength above, and I change that to 80. Events. I go into events, and I have, say, within 5% of the last 50 period high. And I've been doing that scan a lot. All right, just looking for all of them. Sometimes I'll combine it or look for all of them at once, and I do that scan every day. The other one I've been doing is just Davis boxes and seeing what's coming up in Davis boxes. At the moment, it's mainly gold stocks. And that's really it, guys. Just wanted to rattle through it so that I got a talk out today. Didn't want to kind of miss doing Breakout Wednesday when the shit's hitting the fan. But it just pays to be patient and just chill out, and remember that bad shit always happens in the world, and businesses recover. That's what the stock market does. But it's pretty volatile. It's a wild ride. Just got to try and have fun. Cheers. Chat next week. Bye.